Yep.
Because if they would have said it's the best idea they've ever heard, we would have done fine, maybe.
Yep.
And so the more hate I got about Bitcoin, I knew it was a good idea.
Yeah.
But here's the problem. We're all human, and we don't like hate, and we don't like people telling us we're stupid, and we don't like people who say, no, I wouldn't do that. And you said it, we got to convince our better half, right? And, or in my case, better 90%. And they're like, oh, I don't know. I don't know anything about this, and I haven't spent any time on it. And one of my favorite parts of this space, in one, talking to smart people and people who also have seen the crypto light, but everyone I know that I respect started skeptical, which is very natural. It's new technology. I need to understand it. I'm skeptical that there's something, what do you need new money for? Right?
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge.
Mark Yusko dives into Bitcoin, AI, and the coming 14-year tech boom, big shifts, bold ideas, and future-defining trends. Let's watch to explore more.
But the point is, every other person I know, from Paul Tudor Jones to Druckenmiller we're talking smart people, like really smart people. They all started like, no, don't talk to me about this. And yet they all have come around, because once you do the work and once you understand what a blockchain really is and what Bitcoin really is, you can't unsee it.
Yeah, that's true.
I'm a long-term, wildly bullish believer in Bitcoin. And to me, Bitcoin has won as the money for the next 5,000 years. So gold was money for the last 5,000. Bitcoin's money for the next 5,000. It's the transition from analog to digital. Look, money is an asset that exists in the absence of a liability. Gold has been that. We had puka shells and stone wheels, but gold has been that for 5,000 years. Now we have a digital version, which is more divisible and more portable.
Yeah.
Same scarcity. So I think it does that. And so therefore, what does that mean? Well, that means that a single ounce of gold has been a single ounce of gold for 5,000 years. But the value of that gold has changed from single pennies to, $40-something $100. The gold didn't change. The monetary unit changed. And the problem with currencies, there have been 775 paper currencies in the history of the world. 3/4 of them no longer exist. The oldest today that's still surviving is the pound sterling. And for a pound note, you used to get a pound of sterling silver. Today, it would take you 174 pounds to get a pound note. So it's just not, it's not the same. And the pound note didn't change.
Yep.
It's just a piece of paper, a piece of linen. Someone posted a picture the other day, like $50 bill and $100 bill. What is the difference between these two? Belief and custom. Right? Believe one is worth 50 units of effort and one is worth 100 units of effort. It's the belief and custom. And so the problem with fiat is all fiat eventually goes to its intrinsic value, which is zero. All currencies have intrinsic value zero. Money has intrinsic value. Gold has intrinsic value. Bitcoin has intrinsic value. But it's belief and custom.
Bitcoin whales have suddenly gone quiet, and the entire market feels like it's holding its breath. After months of relentless movement, BTC has slipped into an eerie calm. Big buyers aren't accumulating like before, long-term holders aren't selling heavily, and the prices dipped below levels traders were watching closely. It feels like a moment of stillness right before something breaks, either into a sideways drift or a deeper pullback. One of the earliest signs of weakness is showing up in dolphin wallets holding 100 to 1,000 BTC. Their once aggressive accumulation has slowed sharply. dropping from a year-over-year peak of 965,000 BTC to 694,000 BTC. This group includes ETFs and major firms, meaning some of Bitcoin's strongest buyers have paused just as momentum is fading. At the same time, corporate treasuries loaded with BTC have seen their combined market caps crash from $152 billion to $73.5 billion, though they're still holding their coins firm. Meanwhile, old holders are selling less, easing a major source of market pressure. But BTC falling below $89,800 has traders uneasy, and the real test now lies at $86,500. Lose that, and $80,500 could be next. Whether this calm becomes a reset or a warning depends on what happens next.
So, so that's one thing that I'm eternally optimistic, but it's not going to go up as fast.
Right.
Because we're not going to devalue the currency as fast as we did the last 5 years. The last 5 years, we printed more currency in the United States than the previous 245 years. That's just not going to happen again. I mean, we'll print more, but we're not going to Weimar it, I don't think. So that's one. I want to like the whole smart contract universe because I do believe that there's a role for a world computer, right?
Yeah.
I do believe there is a role. Now, a couple things on this. So one, it's funny. I love to go on, spaces and podcasts and stuff. And it's funny. If I go on a Bitcoin Maxi show, they're like, "Oh, you're a shitcoiner." Like, what are you talking about?
No,
I own a lot of
it. Not.
And they're like, "No, but you own Ethereum. You own Solana." I'm like, "Yeah. And your point is what?" And if I go on a Solana show, they're like, "Oh, you're a Bitcoin Maxi." I'm like, I own a lot of Solana. Like, I made more on Solana than any investment in my whole life.
Wow.
Not credit to me, credit to Kyle Samani and his team.
Kyle loves.
But, still, I get to spend the money now. Best investment ever in my career. I mean,
wow.
So grateful. And that's just the law of small numbers. You put a small amount in that turned into a big number. Good. But the point is that I'm torn because there are those that don't want to believe in one or the other. I'm like, but they're not mutually exclusive. They're different. Now,
I agree.
I also struggle. Like, I'm a believer in runes, and the guys will love me. I'll say dog. I like dog go to the moon. And I'm like, how could you like, that's just a meme coin. I'm like, yeah, but it's a meme coin on the right chain. And what do I mean by that? I'm a big proof of work guy. Proof of stake has it. To me, it's too close to the old system. He who has the gold makes the rules. I like proof of work, right? You have to do the work. And so I own a couple NFTs and, dubious value. What is value? It's in the eye of the beholder, but they're worth something, thousands of dollars, whatever. I don't want them on a chain that points to an AWS server.
Mm-hmm.
That's not on chain. That's kind of on chain.
Totally.
I want it on chain. Like my PFP is on the Bitcoin blockchain. Now there are those who say, well, that's polluting the chain. I'm like, why?
Bitcoin treasury firms are entering what Galaxy Research calls a true Darwinian phase, a moment where only the strongest balance sheets and smartest strategies will survive. The once booming digital asset treasury model is breaking down as equity premiums collapse, and leverage, once a powerful growth engine, has flipped sharply into downside risk. The turning point came when Bitcoin slid from its October peak near $126,000 to roughly $80,000, draining market liquidity and wiping out open interest in a rapid deleveraging event. Suddenly, the same financial engineering that boosted these companies on the way up is punishing them just as fiercely on the way down. That's stocks that once traded at massive premiums are now slipping into discounts, even though Bitcoin itself is only down around 30% from its highs. Firms like MetaPlanet and Nakamoto, which previously boasted huge unrealized gains, now sit underwater as their average Bitcoin purchase prices hover above $107,000. Some companies have seen catastrophic drops, with Naka falling more than 98%, a collapsed Galaxy compares to meme coin-style wipeouts. With issuance no longer available, the future narrows to three paths: a long grind of compressed premiums, consolidation through acquisitions or restructurings, or eventual recovery if Bitcoin hits new highs, benefiting only the firms that stay disciplined. If you have been watching so far, thank you so much for watching, and do not forget to subscribe to Bitcoin Zella for daily news all for free.